The latest housing stats for Phoenix just came out, and new builds are not doing well. We are also seeing prices going down across the board. So we're going to look at that today. Plus, we've talked a lot about inventory. And one thing we haven't talked about is rental inventory, which is seeing a complete surge. I'm going to show you what that looks like here shortly. So let's get into it. Thanks for joining me today, you guys. So recently the affidavits of value came out for the June filings. And here's what we're looking at as compared to the previous year and the previous month. So in terms of closed transactions, that's one thing that they look at, which is showing, the movement in our market. 6,621 closed transactions. That's down 0.2% from June of last year and down 6.5% from May. Not super surprising because our market does slow down usually as we get into the summer, and not a big difference from last year. But when we break it down between new homes and resale homes, the new home closings are down 13% from June of last year and down 8.2% from May. So really the number of closed transactions for new construction is significantly down both month over month and year over year. When we look at the resale transactions, the number of resales closed in June is actually up 3.8% from June of last year and down from May of this year. So overall, we were doing better than last year for resale transactions, but this month has taken a little bit of a hit. Now, in terms of sales prices, we're seeing that the overall median sales price was $480,000 in June, and that's up 1.1% from last June. So although we've been seeing prices come down, as I've shown you, it really depends on how we're looking at these prices and what time frame we're looking at. So, we're looking at a median sales price here year over year, all together combined with resale and new construction up 1.1%, but down 1% from May. So seeing that downward trend. When we look at new construction, new home median sales price was $528. That's up 4.9% from last year and up 1.6% from May. Now remember, transaction volumes in new construction are hurting, but those prices are holding strong. Then when we look at resale prices, those are down 1.1% from last year and down 2.3% from May. So we're seeing those resale prices coming down, and that's something we've been tracking for a while. That's not a surprise. New construction, those prices have stayed fairly stable, but that's likely because new construction can offer some major incentives. So they're not bringing down the prices in their community. Rather, they're giving discounts to buyers by buying down their interest rate or paying for some sort of upgrade and giving buyers a little bit more bang for their buck. But when we look at the number of transactions taking place in new construction, down 13% from last year and down 8.2% from May. That is showing a significant slowdown in buyers going forward with new construction, which means that home builders may need to stop building as many homes, because if they cannot get the homes sold that they currently have on the market, their existing inventory, they may want to pump the brakes on not only building more homes, but also buying more land for future developments. Now, the Cromford report is saying that new home sales had a 5% increase expected. And instead of that, we saw it crash by 13%. They say overall, I would describe these numbers as not good, but not terrible. They say new home builders have growing inventories, and this is their weakest June since 2019. So in the last 6 years, they're likely to slow down their start volumes a little to give more time to sell what they already have as specs or under construction. So for any buyers out there who have been trying to find the right home, this is an opportunity for you, because new construction may be a little bit more willing to wheel and deal depending on the neighborhood that you're looking at and the development, the builder. They are obviously seeing some hits in terms of their transaction volumes, and likely will affect prices as well, or at least giving you more negotiating ability. So if you're interested in new construction homes, check the description below. I have a list where you can find out what opportunities are available there. Now, we've talked a lot about home prices coming down throughout the valley, and the Cromford report is talking about this trend taking place, but also how it is a little bit different depending on different parts of the market. So they're saying if we compare the monthly median median sales price for the different cities where they stood 12 months ago compared to today, an overall pattern emerges. They say that we have to avoid the cities with low monthly sales volume like Paradise Valley. They have volatile monthly medians that jump all over the place. But for the cities that have the highest proportion of luxury homes, pricing has generally outperformed the rest of the valley. Single family homes in Scottsdale have risen 4.3% over the past year, and cities that are dominated by the mid-range have struggled to stay above water. So they say Chandler, for example, is down, but only just at 0.1%. These cities with a predominance of entry-level homes are usually faring less well. So Avondale, for example, is down 5.3% for single-family detached homes compared to a year ago. So we're looking at the overall market, and it depends on price segments of what we are seeing in terms of price deterioration. So the areas of the valley that have a little bit more of like that entry level price, those are seeing a bit more of an impact on prices going down versus the higher end and luxury markets are seeing more stable pricing. Now, obviously, this affects you if you are a buyer or a seller. If you're a buyer, this is exciting news. If you're not in the luxury market, you may have some opportunity to see some lower prices. And if you're a seller, this is, not the best news, seeing that prices have been trending downward. However, we are seeing a little bit of a glimmer of hope for sellers out there. This latest article from Housing Wire, why mortgage purchase apps are on a 22-week growth streak. So we're actually seeing back to 2014 levels of purchase applications. And why this is important is because it's kind of a predictor of future behavior in the market. So basically, we're seeing that people are applying for mortgages at a higher rate this year than they were last year. And we've been seeing that trend for 22 weeks in a row now. And for the last 9 weeks, that growth has been double-digit increases. Now, they do say that in order for this data to show real growth, it needs to consistently increase by double digits for several months to generate significant momentum. But this is a little bit strange because we haven't seen much of a break in mortgage rates. And we've kind of been on this overall trend since last year of the market slowing down. So the question is this predicting a potential rebound? They say the remarkable thing is that this growth is occurring despite mortgage rates not trending below 6.64%. Now, we are seeing mortgage rates that are a little bit lower than last year. We're also seeing more homes listed on the market this year. And most of the time, sellers who are selling are also going to be buyers in the future and planning to buy. So they're saying it may be kind of all of that movement that is creating some of this increase in the purchase applications. But regardless, this is something that we want to keep an eye on because this trend is stronger than expected given mortgage rates right now. Now, according to Redfin, new listings, pending sales fall as home prices hit another all-time high. And you're like, what are you talking about? We just talked about prices coming down. Well, Redfin is looking on a national scale, and they're saying that new listings fell 1% year over year during the 4 weeks ending June 29th, which is the first decline in nearly 6 months. And we've been tracking that here as well as we've looked at our active listing inventory that has started to soften. And I want to show you what that looks like this week because we have seen a little bit more of a significant change there. And they're saying that sellers are kind of taking notice of this slower demand, which is likely why we're seeing fewer listings on the market. It's worth noting that the weekly average mortgage rate fell to 6.67%, its lowest level since early April. We're going to talk about where rates are in a second. They're saying some of the indicators of home buying demand and activity are, of course, mortgage rates, near lowest level since early April. We're seeing that. Mortgage purchase applications, we just talked about that trend. And then touring activity, according to Redfin, is up 32% from the start of the year as of July 2nd. They even track Google searches for home for sale, and that is at the highest level in a year as of July 2nd. So again, maybe a little glimmer of hope. Both Housing Wire and Redfin are looking at the national housing market, not specifically at Phoenix. And of course, here we're looking at some very specific data, but we are seeing how our active listings are starting to decrease. So here's where we're at today. This downward trend started a few weeks ago. And I don't even know that I would call it a downward trend, more of kind of like a softening, because it was very, very mild. And now, like between last week and this week, we're definitely seeing a dip there. And I'm not super surprised because summer does slow down typically, but I also think that there's a lot of sellers out there who would have maybe listed had the housing market news been a little bit more positive, but they're thinking, I don't really even need to sell right now. I'm just going to hold off because it doesn't sound too promising. So we're at 25,159 active listings on the market this week as compared to last week, 26,019. Now, since we're in a new month, we can take a look at what happened in June in terms of our new listings hitting the market. And as I've shared every single month here, we've been seeing that new listings this year have outpaced new listings in the last 2 years. Now, as we get to June, we are seeing a little bit of an outlier here, right? So you see this 12,000 all of a sudden is coming out of the blue. This was in 2022. So that's when we had a lot of new listings hitting the market right as interest rates went up and buyers decided to kind of hit the pause button. But aside from that, where we're at in June, we hit 7,570 new listings added to the market, just barely surpassing what we saw last year at 7,483. So the trend continues that this year we are outpacing those new listings. July, however, I bet is going to see a slowdown. You can see we added almost 9,000 listings in May, 10,000 listings in April, 10,000 listings in March. So it has slowed down. It's still been beating out previous years, but again, July just may not see that same trend. So as we were talking about buyer demand, mortgage rates, last week we got the jobs report. And according to this article, government job growth kills the possibility of a July rate cut. So the Fed had been talking about potentially cutting the federal funds rate in July. Keep in mind, this is not the mortgage interest rate, but all of that kind of plays in together. However, what happened with the jobs report is total non-farm payroll employment increased by 147,000 in June. And this beat expectations. However, a lot of this was coming from the government sector. And the private sector only hired about 74,000 jobs. So although this jobs report looks very strong, it is a little bit confusing. So they're saying that the government increases kind of masked the weakness in the private sector. Therefore, just these numbers as a whole is what the Fed was kind of basing their or part of their decision on, not cutting the rate next month. So long story short, don't have your hopes up for a rate cut here in July, but we'll see how things change. And of course, there is plenty of time left in July to get any sort of economic news or geopolitical news that could change the landscape of what happens with mortgage rates. Where we're at recently, mortgage rates continue higher for the third straight day. For the entire second half of June, it was easy to be spoiled by the absence of volatility, but that has changed now that we're here in July. They're saying last Wednesday, the bond market began a small correction ahead of Thursday's big jobs report. And now at the start of this new week, there's been some follow through to last Thursday's rising rate momentum, carrying the average mortgage rate to the highest levels seen since June 25th. So they're saying that's the bad news. But the good news is that June 25th's rates were the lowest since early April at that time. So, we're not too far gone at this point. So if we look at where we're at today with the 30-year fixed, we've come up. You can see that spike there, but around 6.79%. Nothing too crazy, but seeing a little bit more volatility than we had been over the last month. Now, as I always share, if you're someone who's looking to avoid today's mortgage rates, you do have the option of going the assumable mortgage route. Our team has been helping a number of buyers with this type of transaction, and we'd be happy to share more with you about how that works. So check the description below. There's an option there to download a guide on how assumable mortgages work. You can search a list of homes with assumable mortgage or set up a discovery call with our team to talk more about how all of that works. Now, I mentioned we've been tracking inventory, and of course that's important, but what about rental inventory? Because you guys might be shocked by this graph I'm about to share with you. And by the way, if any of this is helpful for you, consider subscribing and share this video with someone who would find it helpful as well. Here's our active rental listing counts for the Phoenix metro area. Holy cow. This is just April. of 2025. Okay. This is not over a year's time. This is just in the last few months. So our rental listings were 4578, today 5915. So what does this mean? Well, if you are looking for a rental as a tenant, you got a lot more options out there. And if you are a landlord, you got a lot more competition out there. So as we look at this, there's 19% more active rental listings than we saw a year ago. Apartments are up 30% from this time last year, and single family residences are up only 14%. So of all of the rental inventory out there, if you're a landlord holding a single family residence, you might have a little better luck beating out the competition, but apartments are up 30%. They say we're seeing apartments appearing in greater numbers, especially in the city of Phoenix, where active listings are up 34% from a year ago. It appears that owners of these properties may be having difficulties selling them, and an increasing percentage are placing them into the rental market instead. And I think that is so true, because I can't tell you how many people I've spoken with who say, well, if I can't sell it, I'm just going to rent it. Whether I'm representing the buyer and trying to make an offer on their property, or if I'm talking to them as a seller, that's always kind of the backup option. And we know a lot of sellers are not seeing success right now, therefore they're turning to the rental market. But how long is that going to work for until you have too much competition and have to drop prices in the rental market as well? So I thought that was some interesting stats to share. I know we don't talk as much about rentals on this channel, but that is definitely something significant that is going on right now. Now, if we look at the CMI as we do every week, we're at about 71.9, but you'll see that supply did come down. We were at 107, 108 in recent weeks. So we are seeing that reflected here. And then demand kind of hanging steady at 76.5. Again, 100 being more of that normal range for everything. So we have supply that's 6.3% above normal. And then we have our demand that's about 24% below normal. If we look at every major city throughout the valley, again, a lot of red arrows. We only had one green arrow last week. This week we have two. Cave Creek jumped into the mix. And this is measuring the change month over month of all of these cities combined. Now, we barely have anything left in a seller's market, just Fountain Hills and Paradise Valley. Everything else is in a balanced market all the way down to Gilbert. And then from Tempe down to Buckeye, we're seeing a buyer's market. Now, the average monthly change this week, month over month, was negative 1.7%, which is less negative than last week. We saw negative 2.7%. So it is slowing down a little bit in this deterioration for sellers. Obviously, that makes sense if we are seeing less supply as well. That competition is going down, even though our demand isn't really going up. All in all, though, very slight. You're not going to be feeling this change week to week in the market. Now, the contract ratio is another great source that we like to look at that will tell us the heat in the market. And where we're at today is 29.7. And so if I go over here and share kind of the key on all of this, 29.7 is in a cold range. Just barely, but anything between 20 to 30 is cold. And if we look at kind of where we've been before this, we've gone down. So we're at 29.7, but the previous week we were at 30.9, previous to that 31.8. So this has been trending colder overall, and this is measuring the number of listings available for sale and how many of those listings are actually under contract. Now, of course, this breaks this down by zip code, which is nice to see. Anything blue and green is in that kind of balanced, warm or cold market. And then anything that is yellow is a little bit warmer. So we only see about 3 zip codes with that yellow. One is in Chandler, 85226. One is in Tolleson, 85353. And one is all the way up north in Glendale at 85310. So keep all of this in mind, whether you're a buyer or a seller. It kind of shows where you may have a bit more of an advantage. Now, although there has been a lot of volatility, uncertainty in the market, a lot of question marks, doom and gloom out there, if you are someone who has already been thinking about buying or starting that process, let us know. You can set up a discovery call with our team. We're actually working with a good number of buyers right now that are taking advantage in this market. It is a buyer's market. Summer is also always a slower time as well. If you just want to chat with us and figure out how the process works and what your options are, feel free to book a discovery call on our calendar. I will see you guys all next week on my next market update.